Thank you, Chairman Capito. Chairman Capito, Ranking Member Meeks, and members of the subcommittee. My name is Thomas Richards, Assistant Vice President of Owensville Banking Company, headquartered in Owensville, Kentucky. I truly appreciate the opportunity to represent the American Bankers Association at this hearing. My bank is a small $63 million community bank that has served the County of Bath for 120 years. We serve a vital role in our community, making loans for houses, trailers, and even tailpipes for people trying to get back and forth to work. We feel it's our duty to take care of our customers, no matter how small their need may be. I'm pleased to comment on several proposed bills today. First, I'd like to comment on the Clarity and Regulations discussion draft introduced by Chairman Capito. ABA supports this measure, which would require a review of existing regulations that may be in conflict with or duplicative of new rules being promulgated by the banking agencies. The mountain of new banking regulations continues to grow. For my bank, with only 26 employees, managing this large compliance burden has real consequences for our ability to meet the financial service needs of our customers. This bill would help to eliminate conflicts among different regulations, eliminating additional compliance burdens as banks struggle to reconcile the differences that exist. This bill would help me and my colleagues get back to doing the business of banking. We suggest the bill's scope be expanded to enable regulators to address instances where a targeted rule may have created an unintended compliance obligation, and also cover instances where a new regulation overlaps with other new regulations, not just existing regulations. The issue of crushing regulation is a deeply personal one for me. Community banking has been part of my family's history for 120 years. It would be a travesty if the burden of unnecessary and duplicative regulation was to make my bank and those like it extinct. It's my hope that the Clarity and Regulations discussion draft will help stem the tide of overly burdensome regulation and allow community banks across the country to continue to serve the needs of their customers. ABA also supports H.R. 2672, introduced by Representative Barr. This bill would provide an appeals process for counties to be designated as rural for the purpose of exempting certain loans from the CFPB's qualified mortgage rule. The CFPB has struggled with finding an appropriate definition. Its original definition of rural, which the Bureau has appropriately put on hold, which was far too narrow and was inconsistently applied, which would have had a dramatic impact on small lenders and communities. In fact, under the CFPB's original definition, Bath County, which covers 284 square miles, 12,000 residents, 4,400 households, and a median income of $30,000, does not qualify, while neighboring counties with much larger and more urban populations do qualify. From a small community standpoint, this can be devastating to the livelihood of that area. Thus, an appropriate exemption is critical to our ability to meet our community's needs. H.R. 2672 would help ensure that whatever definition of rural is ultimately used by the CFPB, there would be an avenue to appeal to the Bureau in those inevitable cases where a county may have been inappropriately excluded. Finally, I'd like to touch on the bill introduced by Representative Stivers, which would authorize privately insured credit unions to become members of a Federal Home Loan Bank. We acknowledge that the Federal Home Loan Bank plays an important role in providing advances to portfolio mortgage lenders. The issue of concern is that the Federal Home Loan Bank claim preference in a credit union failure could be a significant blow to the private deposit insurer, given its small pool of covered institutions. This concern is obvious given that there are only 137 privately insured credit unions. This is in contrast to the FDIC, which insures over 6,800 banks, and the NCU-SIF, which insures over 6,600 credit unions. Thus, access to the Federal Home Loan Bank advances could increase the solvency risk of the private insurer. That, in turn, could harm the existing members of the Federal Home Loan Bank, including my bank, who would be jointly and severally liable for any losses not covered by the private insurer. In conclusion, the banking industry is prepared to work with this subcommittee to identify changes that truly will help banks meet the daily financial and credit needs of our customers. Thank you all very much, and I'd be happy to answer any questions.